huge breaking news coming out of the USA that the USA could be planning to ban cryptocurrency staking for retail customers, aka you. Also, some big news out of the UK and their CBDCs as well, taking a quick look at the Bitcoin charts and a very key level, so make sure to stick around for that. Now let's get into this story. This is from Brian Armstrong, CEO of Coinbase. He said, we're hearing rumors that the SEC would like to get rid of crypto staking in the USA for retail customers. Obviously, if that happens, that's just terrible beyond belief. Staking is great. Staking allows you to earn more coins by using your coins, but it's also a really important part of the crypto experience. Staking allows for more decentralization. Staking allows for more scalability. Staking allows for more security. Taking that away, making it so that regular people in the USA cannot participate in crypto staking hurts crypto networks. Of course, it hurts the earnings potential for your average person in the USA who just wants to stake some coins, earn a bit of yield. The SEC doesn't like that. They don't want you getting rich. They can't have a bunch of people running around out here getting rich. That's not how it works. That's not what their system is set up for. Their system is set up to make sure that a small group of people can consistently get rich. It's insanity. If they ban staking for crypto in the USA, it's a major step back for the cryptocurrency industry. And again, this is for retail customers. This is for retail customers. This is the important thing to be keeping in mind on here because, you know, there are some big funds, institutions, banks, etc., that would probably really like to be in the controlling seat of these networks. Right? So BlackRock Ethereum Fund, is it incoming? Well, we speculated on that possibility already. But if we were to see the SEC, who is essentially just an enforcement arm at this point of the big banking infrastructure in the USA, if we were to actually see this staking ban for regular people, that would mean that all the staking power would then flow up to companies like BlackRock, Goldman Sachs, Fidelity, who then might sell you some kind of derivative product, giving you some kind of exposure, taking hefty fees in the middle, of course. But really, this would basically just mean that big money only in the United States gets to participate in staking, right? All those Ethereum stakers, it's going to be the hedge funds, the financial managers, the big banks. They're going to be running the nodes. They're going to be getting most of the rewards, and they might throw some crumbs off the side of the table for regular people to get. This is not great if it happens. Like Brian Armstrong said, he's hearing rumors, but Brian Armstrong is the CEO of Coinbase. He's incredibly well connected. Coinbase makes huge political contributions in Washington, D.C. If he's hearing rumors, that is definitely something that we should be paying attention to. And the fact that he's sharing that means that it must really have something to it. So this is a big, big story coming out of the USA, and I don't like it. I don't like it. I think it sucks. It would suck if it happened, because part of the great part of crypto is the decentralization aspect, that we are empowering the regular person to participate in these networks and to help run these networks and, yeah, get rewards for it. And that's awesome. There's nothing wrong with that, right? Computer programs are not crimes, but the SEC is wanting to treat them as such, which is very, very unfortunate. I like the take here from DeFi Dad. He said, imagine years from now how silly this is all going to look, like the guy proposing to ban the internet in 1999. It's very, very true. Cryptocurrency is the financial layer of the internet, right? It's the verifiable ownership part of the internet. It is a fundamental part of the modern internet, and it's only going to get bigger. We have over 400 million people now who own cryptocurrencies. That's going to be 1 billion by like 2026. That's going to be potentially 2 or 3 billion by 2030. We are on an exponential increase right now of this technology. This is as important to get right at a regulatory level as it was to get the internet right back in the 90s. Imagine what would have happened had the USA banned the internet. It wouldn't have worked, but it would have definitely slowed the progress of that technology down. Look at all the great stuff that we've got as a result of letting that technology flourish. So let's hope that cooler heads will prevail, and I'm sure there'll be a lot of people challenging such a ruling if it were to come to actually moving forward. I'm sure Coinbase would be right at the forefront of that. And right along with the heavy-handed government craziness, we have the UK saying that they're planning to ban hoarding of their CBDC, effectively limiting people's ability to save in the digital pound when it is launched. So this is part of the scary part of central bank digital currencies, the fact that they have complete control over this money that is completely programmable. Imagine you've got your CBDC account and you get 10,000 pounds up in it. And then when you try to put 10 more pounds in, you get a little message saying, sorry, you cannot add any more funds to your account. You have to spend some first to be able to put more in it. You can't save. Of course, the interest rates are not worth saving anyway, but you're not going to be allowed to save. You have to spend, right? And you can also program in, and this hasn't been talked about by many countries yet, although they have talked about this at the World Economic Forum, so you know they're talking about it, you know they're thinking about it, you know it's probably going to be coming, that we're going to have expiry dates on CBDC. So you get paid your paycheck in CBDCs, and it says, yeah, you have 90 days to spend these before they're invalid, right? So not only are they going to stop you from being able to have too many of them, right? You can't have more than 10,000 pounds, or, you know, you just can't get any more. Spend some first if you want to get more. Or, of course, we can have this situation where we have expiry dates, or you're not allowed to spend it on certain things. CBDCs are a nightmare. I'm so happy that we have Bitcoin. Now, before we break down the Bitcoin charts for you, just a reminder, if you're not yet signed up on Bybit, you need to get yourself an account. It is the best place for trading crypto. They even have 0 fees on their spot markets, which is super awesome. And if you use that link down below in the description, you can get up to $30,000 in deposit bonuses exclusively by using that link. So if you are a trader, do check that out. Now, real quick to finish up this video, talking about Bitcoin, I want to point out a key level here. So right now, Bitcoin, we've just put in our golden cross on the daily, which we talked about recently. So that's pretty exciting. But if we switch over to the weekly, there's some very important things that I want to discuss. The first, of course, is that we are just coming up on the 200-week simple moving average. We've not yet crossed back over that. We are still definitely in the buy zone for Bitcoin. Could always get better discounts moving forward, but right now we are in the buy zone when we are trading below the 200-week simple moving average. What I find very, very interesting is that if we can cross over that, which is still to be determined when we're going to get there, but when we cross back over that 200-day simple moving average, the key area, if we're going to get to what I think could be 2023's high watermark of $48,000, $29,000 is actually the super, super key level to be watching here. Why is that the case? Well, because back in May, June, and July of 2021, that was where we found our mid-cycle support at. We also saw it being a very, very important area of price interest here in mid-2022. So if we can see the price closing above that, then 48K in my mind would be a very likely target for this 2023 market rally. But that's a very, very big hurdle to overcome because of this previous support, which is now turning into resistance. Because of the fact as well that $30,000, that big fat round numbers tend to be areas of price resistance. And of course, we're not even over the 200-week simple moving average yet. But those are the key areas to be watching. And I think really that flip of 29K, if it were to happen, when it happens, I suppose, whether it happens soon or not, that is going to be a big signal that could really spark things in the market, because it's been very exciting recently. We had some great candles. We've seen some coins go absolutely insane, right? Which is generally how we see these things playing out. We see Bitcoin making its big moves first, Bitcoin cooling off. Then over the last week, we've seen AI coins going up 1,000% or whatever craziness has been going on in the AI coin bubble right now. But that is the key areas to be keeping an eye on to really say we could be going on a much bigger run. But until we conquer these two key levels, the 200-week and of course then 29K, 48K is only a distant fantasy at this point. Okay, that's it. Subscribe now. See you next time.